Hello, folks. Welcome to another edition of Market Action. I'm David Russell. Today, our guest is Marc Chaikin from Chaikin Analytics. How are you doing, Mark?
I'm doing well, David. Back from a vacation in Vail, so I'm all energized.
That's awesome. I've been just kind of looking at this. I've been shorting a lot of stuff recently, and just I'm pretty bearish here myself. And as we see the S&P right now, it's just one thing after another. And what's interesting is if we look, we bounced that 200-day moving average in early July, kept us above there for about 2 weeks. Then it was a shorter bounce between late July and early August, and here we are. We were there Friday, and now we're pretty close to it again today. Mark, I kind of get the sense, my sense of something like this is that, you push and push against something, and then it breaks. And I kind of feel like we might be setting up for that. What do you think?
I can't quibble with that. What I've been saying in my market letter is that difficult to know whether we've been through a rolling correction and basically from energy now through some of the healthcare names have undone the excesses, or whether we've got a breadth divergence with fewer and fewer stocks taking us to new highs like Netflix and Google, and we're going to break down. I honestly don't know. So what I'm doing is using the 2040 level as the sort of Maginot line. So on the spider right now, we're right at my support level, which is a pivot type support. If we close below 2760 on the spider, I think we'll test 2040, and that's really going to tell us what we know. For me, it's a coin flip. They could turn right back around and go up if they shake off this Chinese devaluation, or they could break down to support levels much below 2040.
Okay. Well, you're using the SPY or the S&P Cash Index?
I'm using them both, but since a lot of your listeners trade the spiders, I just use that. But 204 basically on the spider, 2040 on the S&P 500.
Got it. Yeah, because if we go under 204, that would be pretty much a breakdown of that support level. And okay. Well, Mark, so what have you been shorting recently? I think you had some ideas here, right?
Oh, yeah. Well, a lot of the shorts have worked, and I think they may be, sort of played out. But we had short recommendations in Yelp before the earnings, in Zillow last week, and Sprouts Farmers Markets. But I think now what's still very shortable is Tesla. There was a story today on Reuters that Tesla's just leaking cash, and that every S sedan they sell, they're losing $4,000, and probably going to have to do some sort of financing, which is dilution, obviously, to rebuild their cash coffers. I mean, this is, you and I have talked about the stock endlessly for the last 2 years. Obviously, very fully valued. You're making a bet that they're going to be the winner in electric cars. No reason that they couldn't be, but you've got Mercedes-Benz and General Motors and BMW also in that space. And, do you want to compete with them if you're Elon Musk? I don't know. But I think now that it's broken down below support, the power gauge has turned bearish again. And then this story today, I think, is pretty damning.
Okay. So, Mark, I was going to go to your Chaikin Analytics tool here, but first I actually wanted to ask you, when I logged in today, it said we have some updates in terms of some enhancements you've made. What are some of the things you've been working on here on the Chaikin Analytics tool?
Well, we're trying to make it easier for people to find ideas. So we've taken our 6 buy and sell signals and isolated them so you can see which stocks have triggered relative strength or oversold buys or sells. We've also got factor movers, and I know this is something you love. We're looking at the stock. We've created lists of stocks where the insiders have moved in one direction or another, where the short interest has changed from very positive or very negative, and so forth, where analyst estimate revisions are going in a bullish or a bearish direction. And as you know, these factors are really what drive Wall Street. And they're in our power gauge rating, but we got a lot of feedback from people, and as you know, there are a ton of Option Monster clients who subscribe to Chaikin. saying we'd love to know when these factors are changing. So it's really in the Chaikin hot list that we've got the juice. One thing you might do, because I picked out a short sale name yesterday, if you go into the hot list and look at upcoming earnings ideas, David.
So, Mark, how do I find the hot list?
You were right there a minute ago. Just
this?
click on, yeah. So now Chaikin hot list are on the bottom.
Oh, I saw it. Yeah, I knew it was there. Yep.
And then we've got other hot lists. We've got, right at the bottom, we've got upcoming earnings ideas. At least they should be in there. Well, they may have taken them out with the redo.
It's probably earnings hot list here.
Earnings hot list. So upcoming earnings ideas. So here's how I find my short sales. Scroll down to the bottom. There was a stock called Celdex, CLDX. Had a bearish rating. I didn't know much about it, but it had a momentum breakdown on Friday. So I said, short this, in my Twitter account, I said, short this gingerly. This is one of these cancer biotech stocks. You never really know, so you don't want to go big on that. But we got an email from a subscriber who said he bought puts for 90 cents and sold them at 380. And,
nice.
This is what you can do during earnings season. So you have Kohl's and you've got Nordstrom's coming up and Macy's, all with bearish ratings. There's a theme there. They're in the retailing business. And I don't know what the earnings, the Kohl's particularly, the last earnings report was really negative. So typically one earnings surprise is followed by another negative earnings surprise. And I don't see anything in the retail numbers that suggest that the medium to low end retailers are going to blow out on the upside. So you got to sort of say, okay, if you're looking to make some money on the short side, buy an inexpensive put option, as our subscriber with Celdex did. He made 400% overnight.
So now, Mark, when we do this, does it actually tell us somewhere where the timing of the earnings report?
Yeah, you've got to go in, click on that little tab up top under the cogwheel. Well, that's
under the cogwheel?
The one right up from there. And generate a portfolio health check. Now, they can get this, obviously, in market action in your daily. So then scroll down, and it'll tell you, keep scrolling down, and it shows you the earnings. So once the day is over, it doesn't show that. But this shows that
I see. Here we go.
Kohl's and Nordstrom are going to report after the close on Thursday, and Macy's after the close on Wednesday. So, and it shows you that it's got a bearish rating. The only interesting stock in here with a bullish rating is King Digital, which might give you some upside. But as you know, the upside has not been that great, even when stocks have reported better than expected earnings, because guidance is so big a factor right now.
Yeah. Yeah, I mean, this is great. I'll tell you, I love these different things you've been adding to this, because one of these things I've noticed for a long time, I mean, it has all these cool, I love these signals that are built in. So can I actually now do something like, say, just show me stocks today that have a bullish or bearish momentum breakdown, or one of these overbought, oversold signals?
Yes, so go to the left where it says signals, please. It's the first one under the hot list, and click on signals. So let's say you wanted to see the momentum breakdowns. Go down to momentum breakdown, and
here we got
stocks triggered yesterday. Now, if you put back that chart of CLDX, please, and then did I get the signal right?
Yeah, CLDX.
Yeah.
Celdex.
Yeah,
there we go.
Yeah, and now go to that signal and do momentum breakdown. So see, that triggered a momentum breakdown on Friday when it broke below the volatility band with a bearish power gauge rating. So that's what encouraged me to tweet a put recommendation on Celdex yesterday. When you get a signal ahead of earnings, power gauge is bearish, the odds are really in your side. Everything is lined up. Chaikin money flow has been negative even on the rally. People can see that on Options House, obviously. It's part of the indicator suite. This is the way we do things, and I've been focusing my stocks of the week as bearish up until this week. not knowing China was going to throw us a big curveball. But for the last 3 weeks before that, we had bearish stocks of the week just because it felt heavy, and that worked out. All related to earnings.
Which was your best winner, Mark?
It was Yelp.
Yeah.
We got a huge move in Yelp, 30% to the downside. Zillow worked. Sprouts Foods was a tweet, not a bearish stock of the week. But it's interesting because this week I felt that the market was due for a bounce, sort of oversold. One of the things that's different, David, about the market here is that Chaikin money flow has been negative on the rallies. Every time the S&P rallied up, Chaikin money flow was red, not green. So
can we see that on Chaikin, or do we have?
Yeah, no,
SPY?
you can put up SPY.
Okay.
So notice that on those rallies, those last two rally peaks in June and July, you got up near the highs, but look at the Chaikin money flow. It stayed red or negative. Historically, that has been an 85% accurate indication of a changing trend, a reversal back to the mean. What happened on Friday, which caused me to be a little bit bullish, was you actually got oversold, and Chaikin money flow was finally green, not red. And typically when you get oversold with positive Chaikin money flow, you get a bounce, which is what we got yesterday. And obviously that's been undone by the Chinese today. But there were some interesting names yesterday in the energy sector that were up huge. Let's look at RIG. I don't know what you feel about. Obviously, the power gauge has been extremely bearish on the drillers, but the power gauge has turned bullish on rig. And so here was a stock that was up 6.6% yesterday, and all it's done is given back a tiny bit of that rally today. Interesting. Relative strength is still negative. Money flow is still negative. I know a couple of brokerage firms upgraded their opinion. Jefferies upgraded it to neutral from underperform, and another brokerage firm came out with a buy recommendation. Obviously, anybody who's been bottom fishing in energy, except for the refiners, has been way off the mark and hurting. But it may be that with this double bottom in place in some of these stocks, that we're going to start seeing outperformance in the energy sector. The refiners have just been killing it on the upside.
Mark, what's going on with the refiners? Because I'll tell you, I look at this group, and I've just been afraid to touch it more because I don't really understand all the dynamics. Is it the fact that it's an improving economy and there's better demand for gasoline, or is it something to do with that crack spread between Brent and WTI?
Well, the first thing I want to comment on is I agree with you. These factors are so complex, I don't understand them. That's why we created the power gauge rating. Because, it's looking at 20 factors. It factors in what the analysts are doing and saying. But I think the simple reality is that refiners benefit from lower crude prices. It's their feedstock, and it could be the cracking spread or the Brent West Texas spread. But Valero and Tesoro have just been killing it on the upside. You just can't argue with that kind of price action. And look at that.
No.
Tesoro's up today. So Holly Farms, Tesoro, Valero, Marathon, all just extraordinary performers. If you want energy exposure, why bottom fish in the Pioneers and the Range Resources of the world when you can buy stocks making new highs?
I agree. To me, I'll tell you, I just the thing I look at some of these stocks, I mean, it's interesting you see RIG, but, when I look at things like the Pioneers or whatever, the problem with things like this is they often just don't rally really fast. Now, what was the catalyst that put RIG in the bullish camp? Was there a specific thing that changed for this name?
I think basically their financials are stronger than some of the other people like Diamond Offshore, and the technicals improved the way we look at them in the power gauge. So if you click on the technical arrow, it'll bring down the 5 technical factors. So volume trends are positive, and we've got a mean reversion indicator in there. Our price trend rate of change is mean reversion. So the weaker the stock, the stronger that is. And you can see it's formed that double bottom, and our patterns do pick that up. So I think when the technicals got a little better, because their financials are pretty strong, the power gauge rating turned bullish. These are relative ratings, remember. So Pioneer still has a bearish rating.
Wait, this is the wrong one. Sorry. Yeah, there we go.
Yeah, there's Rig. If the power gauge hadn't turned bullish, it's not a stock, quite honestly, that I would have touched. But it did turn bullish. It also showed up in one of our growth screens, high earnings retention growth screens. So it got put into a couple of the growth portfolios that we advise on as well.
Interesting. Well, I noticed in your email you sent me, you were also looking at some of these insurance companies like Progressive, I think. And what's going on with these property and casualties?
Well, I think the insurance stocks have been higher based on a potential Fed rate hike. Just as with the banks, the insurance companies benefit when interest rates go up. Progressive looks great. Aflac triggered a buy signal and looks bullish. And some of the old suspects like AIG and Hartford Group, HIG, also looks good in our work. So there's been a lot of chatter today that the Fed would defer a September rate cut because of the devaluation of the yuan. I'm not sure that's the case. I think Stan Fisher, who really is the voice behind the Fed right now, whispering in Janet Yellen's ears, basically said yesterday, we're going to be driven by inflation here in the U.S. It's possible that the Chinese devaluation defers it till December, but the betting still is we're going to get a Fed rate hike in the September meeting, and that benefits the financials in a big way.
Interesting. Well, bonds are moving higher here, and, I was thinking, I've kind of changed my tune on the Fed rate hike because this Chinese thing seemed to me that just one more thing that it makes it hard. So I'm waiting to see myself. But one thing I'll point out, some of the economic news, which is interesting, is that the German zoo today missed by a mile. And that's interesting because it was really doing pretty well, and this is a pretty good forward-looking indicator in my opinion. So I'm more cautious on the economy, really. I mean, I think we've been good, but when you look at it, we had both of the jobs numbers last week missed, and consumer confidence and consumer sentiment were weaker than expected, and GDP missed, and ISM, manufacturing, all have missed in the last 3 or 4 weeks. So the one thing that's interesting on market, you say, though, is if you look, productivity was weaker than expected, but that's actually bullish for wages. So I think the one part of the economy that's strongest is I still think that we are going to be continually, maybe not beating estimates on jobs, but I still think that the overall employment situation is going to be good, and it's going to be beneficial, and I think it's going to be supporting certain names, like especially in the housing space. Are you bullish in some of the home builders here?
Absolutely. KBH, KB Homes, and Toll Brothers are my two favorites here. The housing picture is really quite good. That's one of the reasons I got bearish on Zillow. Zillow has failed to make money in the 5-year housing boom. Maybe calling it a boom is a little bit overstated, but it's certainly been a damn good housing run. Yeah. And Zillow, who's the wheel in internet housing, home information, why the heck can't they make money in a housing market that's booming? And here you are making new lows again today, or testing the lows, the closing lows in any event.
It just seems to me a name like Zillow, it's just not a clearly established business model. And I think that, to me, is my biggest concern. It's like you said with Tesla. These are companies that sound great on paper, but, I don't know. I'm a little more like Warren Buffett. I believe that, real estate's existed for a lot longer than I've been alive, and Zillow hasn't. So I just really wonder, is it really such a great business? Does real estate really change just because they invented the internet? And I don't know if the answer is yes. I think that the business is still done the same way, and it's really not clear to me that Zillow is going to be a huge moneymaker in this industry. So
Well,
Mark, you know what's coming?
agree with you. I agree with you. One point here that people ought to realize, and I didn't come up with this as an original idea. A great short sale newsletter had this. Zillow is basically a lead gen company. They generate leads for mortgage and real estate brokers. So lead gen companies at the outside trade for 2 to 2.5 times revenue. Zillow is trading at 9 times revenue. It's a lead gen company, guys.
Look at the price to sales.
The fact that they're on the price to sales is extraordinary. Go click on the fundamental. Well, you can see it right there. They're trading. Their market cap $4.4 billion and revenues of $479 million, and they fudge the numbers. I hate that. The CEO has sold over $14 million worth of stock in the last year, and I think, forgetting that we're picking on Zillow, which is probably going to go 50% lower from here over time.
Look at this chart. It looks like it's about to accelerate, like go boom.
But for anybody on this webinar, that's why we have insider activity as one of our 20 factors. This CEO gets on their conference call, and he's all flowers and chocolate, and the guy sold $14 million worth of stock. His CFO of 9 years resigned, and basically he reported a quarter that was totally unintelligible, which is why the stock spiked up pre-market to over 82 and then traded down to 69 2 days later, because he used phony comps. He used the comps as if Trulia, which he had bought, had been part of Zillow back then. You've got to really be careful in these internet-related companies, whether it's Tesla, which is a much more solid company in my view than Zillow, Yelp, any of these stocks, even a LinkedIn someday. You've got to really look under the hood and see what the heck they're doing. And when the insiders are selling and when they've got to pick up their advertising spend in order to drive traffic to the website. And then one final thing, guess who they're competing with now? News Corp. Rupert Murdoch bought their biggest competitor, which is Realtor.com. So the deck is stacked against Zillow, and when I see the CEO selling $14 million worth of stock, I don't even want to hear what he has to say, because I'm a big believer that I look at someone's feet and not their mouth. I learned that when I was dating. You know, great-looking woman tells you she loves you, but when you return when you try and call her for a date, she doesn't answer the phone. That tells you everything you need to know. So with Zillow, CEO selling the stock but telling you the company's in great shape, I'm not going to believe him. I don't even want to hear what he has to say.
Well, I've also noticed some real inaccuracies in their price forecasting tool, which makes me think it really is nothing but just a thing to get people to come to the website. It's just bogus nonsense that they put up to grab attention.
I agree.
Which to me means that they basically took this thing, they dressed it up, made it look like it's something it isn't, and not only did they sell it to customers, like people who sign up to use their service in terms of realtors, but they sold it to investors. And then, well, you know what? It's an ugly reality check when you realize that it really isn't such a great stock after all. Well, interesting. Mark, here's a company that Research Lab was coughing up that I want to take a look at on Chaikin, which is Builders First Source. This company has basically they do some kind of supply for home builders and stuff. It's in the same space you were talking about. They did a big merger that recently changed their entire business model, and it looks really bullish to me. It's kind of interesting. Why do you think here it's not a bullish rating? Is it maybe just overbought after this big rally?
It's the valuations. Look up top and the four components. It's the financials, big valuations. It was bullish until it spiked up.
Yeah.
And then the valuations like free cash flow and price to book started to weigh against it. And that's 35% of our model. But what we say and have always said is if the power gauge is neutral and the relative strength is positive or green, which it is, and look at that Chaikin money flow. Do you think the institutions are doing anything but buying the stock? They're buying it. So click on the signals, David, because I'm sure that you got a relative strength buy signal along the way. And those are like gold. So if you go up to the two triangles, which I know you know, and then click on relative strength buy. I haven't looked at this stock, so I'm just guessing. Yeah, look at those two entry levels. Now, for options traders, this is why we've gotten over 200 Option Monster subscribers to Chaikin. Those signals are good for 4 to 8 weeks. So they're good for swing traders, and they're also good for an options play where you're not just trading the weekly options. I know a lot of people are trading weekly options these days, but the relative strength buy signals are just fabulous. We just had one in Citicorp. We had one back there. These are great for options traders because you don't have to hit and run if you don't want to. You can go further out. You're the expert on this, David. Tell people if you had a window that said, I think this stock has a high probability, 2 out of 3 chance of going up over the next 4 to 8 weeks, how would that affect your option strategy? How would that change the way you would find a bullish strategy?
Well, it would depend on the company's liquidity, because if it was something like an Apple or a Bank of America, I would basically, I would go much shorter in time. With a company like Builders First Source, because I think if you have a Bank of America or an Apple, if you're right, you can roll it without a lot of cost because of the bid-ask spread. But something like Builders First Source doesn't trade a lot of options. So then the problem is that even if you're right, rolling it, you might not be able to make money rolling it because of the bid-ask spread. So for something like Builders First Source, I would go out to, say, January and just buy the out-of-the-money calls. In this case, when it was down at 12, I probably would have bought the $13 or $14 calls if they existed. That would have been my strategy.
So that's really good.
But if it were Bank of America or Apple, then I'd be going out 2, 3, 4 weeks.
And then roll them if you still like it.
And then roll them, yeah, because you're going to have penny-wide bid-ask spreads and all that sort of thing that would make a lot of sense with it. So it really depends on the nature of the underlier.
Right. One change that I would make is if people are cautious and they like to do price spreads, when you get a relative strength buy signal, you don't have to do a price spread. You don't have to reduce the cost of that option. You can just buy the call outright.
Mm-hmm. Right.
Now, obviously, a lot of times price spreads, vertical price spreads, do reduce your cost of the long side of the position, but they also restrict your potential. So
exactly. And I think a name like Builders First Source, I mean, this is the kind of stock, in my opinion, that I don't want to be like, overly enthusiastic, but this stock could easily go to $30. It's a small cap company that has a new synergistic story, which means that people are going to be excited about it, and money's been flowing into it. This is the kind of stock that can just go more than you would ever dream. And I'd rather just buy out of the money calls and leave it alone, because these are the kind of stocks that are obscure, exciting stories. That's what I think, Mark.
Well, and that's where Chaikin can help you. The power gauge obviously was bullish before the big breakout when the news was announced of this, I guess, roll-up, would you call it, or consolidation of a couple of companies. But when you see money flow like that on pullbacks where it stays green, not red, that's a tip that we teach in the webinars. We call it self-accumulation. You're going sideways or you're correcting, and the money flow stays positive. It tells you the institutions or the key players, there may not be a lot of institutions in this stock, are not selling. They're actually using the dips to buy and to accumulate. And that's what taking money flow can do for you. So when you see that combined with relative strength and there's a story that's positive, these are some of the great names where you do get those doubles.
Here's another one that I'd love to take a look at. This company bought Procter & Gamble's consumer products or beauty or something. I don't know exactly. I don't know much about cosmetics. But I do know that this stock was a monster. Research Lab was flagging some of the breakouts along here, and you had some nice entries here on the Chaikin. They bought the Procter & Gamble thing. They pulled back. They hit that level exactly, and now they've been continuing higher. So look, this one probably, I don't know, it looks like this one is similar in terms of the, it probably is very expensive. But this was another one to me that looked kind of interesting over the long term, because I feel like companies like this, even if the market is, sells off and crashes, people will give this company a break. They'll basically give it leeway because it's a new story. They're individual stories that people are excited about. So. And Tempur-Pedic's another one that's got these investors in there that this one's run so much already. So, Mark, some of the other ones Darden and Facebook. You like both of these, right?
Yeah, two sort of diverse companies. Darden has really made the big turnaround that the activist investors wanted them to make. In theory, it's a beneficiary of consumer spending, which we've never really seen. We haven't seen that uptick in consumer spending that everybody was looking for, but the restaurants and the auto stocks, the automobile sales really were the only ones to reflect it, but Darden has just done a great job. And, you pull back here, it's a pretty good support level. Facebook, I was surprised when the power gauge turned bullish, but I guess of all the social media stocks, Facebook is doing the best job of monetizing and converting to mobile. That's one of the big problems that someone like a Yelp has. They've got a mobile app, but they have no way to capture your address. Think about that. Yelp doesn't require an email address. It's part of the reason their business model is terrible. Facebook, on the other hand, knows everything about you, and so they can sell, advertising based on that. So there are two names that you can look to buy on dips, even if you're bearish, because the technical patterns are just fabulous there.
Okay, good. I've liked Facebook a lot. I feel like it might pull back some more. I mean, Mark, do you like it here, or do you think it goes back closer to 90?
It depends really on the market. It's not really giving much back here. I think in this market environment, you want to buy weakness in any event. So 90.91 is a great spot to buy the stock. I don't think you have to reach for it. But the money flow is very, very strong. And now you've got everything lined up: positive money flow, positive relative strength, and a bullish Chaikin power gauge rating. So that's a powerful trifecta working for you there. But David, Can I go back to a name you mentioned, because it's related to China and it's a stock where we really nailed it, even though the power gauge didn't turn bearish? Apple.
Oh man, I just made so much money today in Apple puts.
Well, there you go.
Yesterday it ran up. Yesterday it ran up to that low from last month, and I bought puts on it. And like today, they just were awesome. Were you short as well?
No, but we've been telling people to get out of the stock for the last 3-4 months, and the reason is the money flow, and then finally the relative strength turned negative. So Chaikin money flow was just awful. Notice, same as the SPY, on all these rallies, the money flow stayed negative. You made that sort of island top there at 131 when the earnings came out, and the money flow never went positive. And then the relative strength has turned negative. So here's a company that's exporting iPhones to China.
Exactly.
There's where the devaluation kills you. Anybody who's exporting, like the Germans, that's part of, add on to your negative economic report the fact that Germany now has a much more difficult time exporting into China, as does Caterpillar in the U.S. and Apple. And you've got a prescription for a big dose of pain for Apple. So that's why these are two stocks that are getting killed disproportionately in the market today. Apple down 5% to a new low. And I don't see anything in the cards for Apple that's going to be a game changer. Power gauge is not going to turn bearish because the financials are so strong. The earnings picture is so strong, rather. So, well, I shouldn't say not. I doubt it. But what you will get, and this is where we get our relative strength.
Look at this relative strength down here. It's horrible.
Oh, it's terrible. So now what's going to happen is every time Apple rallies above its 21-day average and drops back below, we're going to get a relative strength sell signal. And I wish I could show you the chart from 2012, 2013. There were 6 straight relative strength sell signals as Apple was dropping from 700 to 380.
Well, I mean, I gotta say, this stock to me was one that, the thing that really grabbed my attention was we had this really tight sort of, consolidation zone up here. And when you're in a tight sort of zone with all the moving averages tight together, when you break down, you don't just go down a little. I mean, you get continuation. It's like a spring that's been wound up, very low, very tight volatility. And then when it breaks, so I still think Apple's going closer to 100 before it's done. I think I sold my puts way too soon.
I think, well, that's all right. In this market, who knows? But I will tell you that I watched CNBC when I was out in Vail, and one of the geniuses on one of the panels was asked what he thought of Apple, and he said, "Oh, I just buy this and put it in a drawer. In fact, if I was on a desert island and 3 years later I came back to civilization, I'd be thrilled to have owned Apple." And I was wondering, where was this guy in 2012-13 when Apple went from 700 to 380 with great fundamentals, pre-split stock? I mean, the fundamentals were fabulous. So anybody who tells you that you can put Apple in the drawer, this sounds like the Nifty 50 in 1972-3. And I don't think too many of your listeners who were around back then, but there was a theory that there were 50 names that you bought, put away, and never sold. And they were Avon, Xerox, Polaroid, Eastman Kodak. Most of these companies have just been destroyed 40 years later, and anybody who thinks you can take a stock like Apple, put it in a drawer, and forget about it is just deluding themselves. And I love Apple. I mean, everything on my desk is Apple. I buy the products. I think I'm
doesn't mean them. Yeah. I agree with you, Mark. One of these things that, to me, I can tell you, coming from the world of financial journalism, I gotta say, when you see people come up with these things that sound cool, like buy a stock and hold it for whatever, to me, that's made to sell magazines, and it's made because you got some guy staring at a screen, or in those days a typewriter, who has to get an article done. And it's, to me, it's I'm very wary of that because I've worked in the sausage factory, and for me, it really comes down to the kind of stuff you have built into things like the power gauge that I'm always looking at, and what we've got in stuff like Research Lab. Because I agree, and you look at this relative strength here. This really says so much, and it just really stands out. By the way, Mark, because you had mentioned this thing about Builder's First Source, and you noticed the fact that it had these, it was the relative strength buy sell here and here. I wanted to point out the fact that when you have these signals here as well, folks, if you look at these signals, you can say, all right, let's show all the stocks that have relative strength buy sell. It'll bring up this list, and then you can actually go through the list and you can look at stocks that are actually triggering those things today. So I want to just point out that's something that before, I don't think it was. You've added this this is one of the things you just added, right, Mark? The ability to find it.
Yeah,
Love
my son Eric has talked to about 60% of our users, and this was the biggest request in terms of functionality. I want to be able to find all the stocks that meet certain criteria, and these signals are so powerful that it's important to know that. So yeah, this was just rolled out on Sunday. It's seamless. It comes right through into the system. And David, I'm flattered that you're using the system so aggressively. Appreciate that.
Love it, yeah. Well, let me take a look at real quick some of the unusual option activity. This thing, the VGK, it's basically a European ETF. It's got like Nestle and HSBC and stuff in there. This has got a bearish trade today. They're buying the 55 puts. They're selling the 52s and selling the 57s. Bearish three-way trade. The person almost certainly owns the stock, and they're basically saying, if it goes over 57, I'm a willing seller. If it goes, and then I want protection between 55 down to 52. It makes a lot of sense when you look at the chart, because this would be a support level where they think, this thing might just take a dump down to this support, so they want protection. That's a three-way in VGK. ARRY is a small biotechnology company. They are buying the December 6 calls. Monster Worldwide, I'm not sure why this stock's been doing so well, but they're buying the August $8 calls today. Jive Software, Mark, I don't even want to look at what the power gauge is going to say about this thing, but it does. People keep selling puts in it, and I'll tell you, they were selling puts when it was like a $7, $8 stock. Now it's $4. They're selling the AUG4 puts. I just don't know what's going on. This company probably has an incredibly high price-to-sales ratio. Let's just take a look. You showed us being vaguely bullish, but this has been one that's been it's interesting.
What are they doing in this one, and options-wise?
Well, they're selling puts. They're looking for it to hold support.
Yeah, maybe they're following the power gauge. I don't know.
Some of the other stuff today, they were buying puts in TiVo. This stock, if you look at it, it's got a bearish triangle. If you look at this support level across here, and then we look at the line coming down like this, Earnings come out in this name in about 2 or 3 weeks, and this is just a pure bearish trade. September 9 puts bought. Yesterday they were buying calls in Exelon. They're continuing to do so today. Utility stock with the possibility of interest rates, at least potentially people thinking, hey, maybe rates don't go up. That's good for utilities. Exelon, today they're buying the AUG 32 and $33 calls in Exelon. Comstock Resources. This is one of these little fracking stocks that has gotten hammered. Today what they're doing is they're buying back the August $2.50 short puts, rolling it to September. Now this is someone who sold puts at a bad time. Now they're underwater, so they bought them back and they rolled them to September. This is just like a Hail Mary trade or something like that. They're just saying, God, I hope this thing comes back. But to me, this is a highly leveraged company that's in a bad space. These fracking companies, not so pretty. Medtronic has a ratio spread when they're basically doing the expiration of September 11th. They're doing a ratio in the 76 and 74 puts. And they were also buying some calls today in GE. Mark, I've noticed that a lot of these in GE, they're buying the November 26 calls. Well, do you like industrials or GE or anything? Because it seems like they've been trying to come back a little bit recently, but they haven't performed really well.
No, industrials, materials, and energy are just like the plague, and I don't want to go near them. The only stock that smacks of being an industrial stock that we like is Goodyear, GT, which is obvious. They're in the replacement tire business, and the power gauge has been bullish for quite a while. No, I think you got to go with the sector trends. Now, interestingly, the utilities, which had been at the bottom of our power bar, there were more bearish by a wide margin than bullish. In fact, there were no bullish utilities until a week ago. We've now got 4 utilities, which speaks to your Exelon observation. 4 utilities with bullish power gauge ratings now, and only 4 with bearish. So Ameron, DTE, NRG, and XEL all have bullish ratings. DTE, yeah.
AEE, you said Amarin? This St. Louis company? I remember this company.
They just turned bullish 2 weeks ago on all of these. So I think you're right. There may be a trend where yield is more important now if people are assuming there may not be a Fed rate hike. I want to go to one stock, David, that I have featured as a bullish stock of the week back in February and have talked about 3 or 4 times, AMSG and Surge. And look what happened to this stock last week. You go on Chaikin, the power gauge was bullish for over a year, or almost a year. And look at that relative strength in that basing period. When it broke out in January, February, I recommended it was around 56, 60 area. And then they announced much better than expected earnings, and it had been preceded by a relative strength buy signal, and they're also pursuing this roll-up strategy. They're buying mobile anesthesiology and surgical companies, and so the hospitals are trying to outsource a lot of these procedures like anesthesiology and some minor surgical procedures, and Surge is a stock that nobody's following. Very few analysts follow it, and this stock has explosive potential, and we just saw that. But look at today; it's just unchanged. No selling pressure. Any chance you get to buy this stock, just buy it.
I'm going to add this one to my list of stocks that are, you get these stocks that are just great stocks, and when the market, does what it does, and we get these sell-offs, like in Trexon, this was one to me. I didn't look at their earnings, but this is one we identified as being a monster. And, we said it was coming back under 50. To me, this is one we still want to wait on. This company had sequential, book value growth for the previous quarter of 50%, which I've never seen any company do before. But, I still think this one might get now down to the mid-40s. But, this is going to be one also that this will get hammered. But if this stock gets to its 200-day moving average, this could be one to take a look at. Mark, people are asking, which of the 3 banks do you like the most? Bank of America, Citi or JPM?
Citicorp and JPM on the large caps, and then KeyCorp and SunTrust in the regional banks, and Fifth Third, FITB. I think this pullback here today is an opportunity to buy these. Key has turned neutral, but SunTrust, STI, and FITB, and Citi is where I go. I think Citi has cleaned up their act. I haven't seen any major fines lately. Their legal costs are heading down. Of course, you're making a little bit of a wager that the Fed is going to raise interest rates because I think the banks, their net interest margin obviously improves if interest rates get hiked, and that flows right through to the bottom line. But I'm betting that the Fed is going to put on the Bose headsets and not be influenced by the noise out of China. I could be wrong, and I'm not an economist, and if I were, I'd be wrong a lot more than I am. But I think that these major banks are the place to be. The financial sector has been relatively strong, and so insurance, major banks, and some of the regionals, I just love them here.
Okay. Well, Mark, I want to point out talking about the broader market because something interesting I noticed here on the Options House platform is the VIX recently has been very low. It's down around 12 and stuff, and we've been recommending, we did it again today, to buy high Vega puts. We were saying go out to June of next year, go out of the money, do some heavy Vega around the 50 to 60 Vega, because every point the VIX moves higher, you're going to basically make, like the puts I cited today, for example, on Inside Options Pro had a Vega of around 57. I own these puts. The 185 puts. 57 Vega means that the VIX moves up. Every point the VIX moves up, these go up by 57 cents. And then you're also going to get the market going down. You get the delta on them. So it's a way to basically, I've talked about this strategy on different occasions, but I want to follow through with it just for a minute because if we look here, if we look on the S&P 500, we can see that the implied volatility, this orange line on the SPX is very similar to the price chart of the VIX because the price chart of the VIX is essentially the implied volatility of the S&P 500 and the implied volatility of the S&P 500 here, so it's going to be very similar to VIX, just so you understand that. Now the thing is, this has been falling since like late June, but then if you, early July, but then if you look on the actual blue line, this is the actual historic volatility. It is actually the highest now that it has been since early February. So we have real volatility going up and implied volatility going down. Options are too cheap. Puts are too cheap on the SPY right now. And I think going out in time, getting the Vega, less delta, you're going to have that opportunity where if something drops and the VIX goes shooting up to like 20 or 30, which is totally possible, especially when you consider the time of year that we're in, those puts are going to just make money. So I'm long those puts myself, and I wanted to really point that out because we see from looking on the Options House platform, puts are too expensive, are too cheap, and you can take advantage of that because then when if the market does crash, they will get excessively rich, and then you get the excessive swing to the upside, and then you can unload them. So I just want to point that out. This strategy makes sense to me. Mark, I know you look a lot at seasonality and stuff like that. I mean, where do we stand in terms of going into the second half of August, Labor Day, and then September, October? It seems to me anecdotally those tend to be more bearish months, but I'm not really sure. I know you look at that more. What do you think?
Well, that definitely look for an October low in almost any year. Typically, years ending in 5 that are pre-presidential years aren't as bad in October as normal, but I think what might happen is the Fed hikes interest rates at the September meeting. The market has an overreaction to the downside, creates a double bottom in September and October. Your puts go way up. By the way, could you email me that trade because I'm going to buy those.
Sure.
That's something I'm really excited about. And then you form your bottom and you have a great fourth quarter. So I still think we're going to end the year at roughly the 2,200 level on the S&P, 2,200, 2,250. How we get there is it's in question. And I actually think that a Fed rate cut will wash out some of the weak holders, and then rate hike rather. You'll see the financials rallying, which is always good, and then you'll see a strong fourth quarter. But there's so much that can happen between now and then. I think ex-China, we probably would have rallied into September, into Labor Day, but China just threw us a big curveball, and that's what makes these markets interesting.
Okay. Well, want to point out that we're kind of still down near the lows of the day here. And for me, like I'm saying, the thing I'm really watching is the low from last Friday and the 200-day moving average. I think that if we go under this low, I think that I think it's going to get ugly. So, and I think we will. I'm really bearish right now. I've been basically beating this drum for about the last, 3 to 4 weeks, really since this level right here. This, to me, was the failure that we did not have followed through the upside. We made a lower high, now a second lower high, and then you look at the state of some of these other indexes. To me, like things like the NASDAQ, lower high. You look at the Dow Jones, and the Dow looks like it's basically like already on the verge of a correction. It has been under the 200-day moving average for a long time now. So those are the main things I've been watching.
Well, that's the most bearish I've heard you in a long time, David.
Oh, absolutely. Yeah, Mark, I've been doing it a lot. I've been just I just feel like 2.5 years of pure upside. At a certain point in time, complacency, it's dangerous.
Well, there's some interesting, the near-term targets to the downside, if you do break 2040 on the S&P, are 1980, which is a 50% retracement, and 2015, which is, another retracement of the rally. But when you think about it, if you're looking for 10% correction, 2137, that's 215 points, gets you down to 1920 area. So if you're right, I think you've got to look for an 8 to 10% correction, which takes you down to 1920.
Good. Well, Mark, I'd like to
make
one last
happen, though.
Yeah, well, here's the thing. For me, if we take out, if we get back over these highs from the last few days, I've been looking at basically my E-mini futures on my 10-day hourly bars. I found this an incredibly useful chart. If we take out, these highs here, I'm just gone. If we go back over 2080, my entire bearish thesis, pretty much goes away. This is to me, very much short term here. We very well could bounce. So I want to just, point that out. But I just tend to think when you look at what Apple did, you get that tight band at the top, and then it breaks down. To me, it seems reckless not to be on guard in the S&P. Now, Mark, one thing I'll point out about those puts is that because you have less delta and more vega, if the market turns around and rips to new highs, you have time to exit them, because the thing is they have less delta, and the VIX is still relatively low. So if the VIX goes back down to like 12, then those puts will lose money. But if you buy weekly puts or something and you're off by like 2 days, you can lose money even if the thing goes down. So I just wanted to point out the nice thing about those puts I was recommending out in June is the fact that that it has, from a risk-reward point of view, it's really hard to lose 50% of your money in those puts. So for me, I always have a stop loss in my options, 50% stop loss in anything I do. And so it seems to me it'd be really hard for my stop loss to get hit. For the market to rip to new highs, we would have some real, I think, warning first. I don't think it's just going to happen out of the blue. Mark, last question. What do you think about Goldman Sachs? You didn't mention this one with their banks.
Well, it had been bullish until Deutsche Bank downgraded it after their earnings came out, and that was back in July. Earnings were better than expected. Deutsche Bank downgraded it to neutral along with Citicorp, and that's sort of what created the selling pressure for the banks. That's not a good-looking chart here. You make a lower low today, and you now have a series of lower highs and lower lows. In general, their report was good, as was Morgan Stanley, but the chart pattern doesn't look great to me. So I'm sort of neutral on Goldman here. They're very nimble. They'll figure out how to make money in any environment, and so long-term, pretty good investment bank, but I don't like the chart pattern here.
Yeah, it really doesn't look good. All right. Well, Mark, before we go, so Sandy sent this over. We have the Option Monster Boot Camp. What happens if people go to this link here that we have that we have on the rundown today?
This is a new offer and a new sort of a conceptual that we've put into place. In addition to the Chaikin Analytics subscription, we're now giving 11 hours of coaching in 2 4-hour group sessions, then 2 1-hour one-on-one coaching sessions. These are all obviously through GoToMeeting, and then a half hour each with myself and our market strategist, John Schlitz. And the reason is the feedback we've gotten from people is there's so much power in Chaikin Analytics that we really want to know how to use it all. You know, you've mastered it. So normally, as you know, an hour with John or Pete costs you an awful lot of money. This isn't in person, obviously. It's on the phone or in group GoToMeeting sessions. But it's part of our ongoing attempt to educate people and let them experience the full benefit of Chaikin Analytics. So if you subscribe at $1,950, you get this 11 hours of coaching. 8 of them are in group sessions with our very experienced onboarding people. And then there's 3 hours of one-on-one coaching sessions, including a half hour with myself and John Schlitz. So I think this is really something that you can't even put a value on it. The marketing people tell me it's worth $6,000. I think it's like the MasterCard. It's invaluable. It's priceless because the ability to learn how to use a system like this from the people who created it, who are talking to customers every day, is really what differentiates Chaikin from everyone else that's out there. So, you know me, I get uncomfortable being self-promotional. I like to talk about stocks and offers, but this really is a unique offer, and we've created it for the Option Monster community. And I think anybody who's been thinking about subscribing to Chaikin should really consider the value of this one-on-one coaching and the group advanced investing sessions.
And it's available to anyone who goes to this link, or only the first 5 or 10?
No, anyone who goes to this link.
Excellent.
Yeah.
Well, that sounds great, Mark.
Yeah, this is we want to get people to the level that you've gotten with Chaikin Analytics, and to do that, we think 10 to 11 hours of coaching is really going to get everybody up to speed. And we know that Option Monster clients have done very well combining your work and the heat seeker ideas that John and Pete come up with. So we want to broaden that out a little and make sure that people really know what to do with the system. So as always, it's great to be with you, David. This is really fun.
Yeah, I agree. Folks,
and we'll
a few people
see you in San Antonio, I guess. We're already looking beyond Labor Day to the next ILAM conference.
Exactly. I think this time, is it going to be Sandy who's going to speak, or will you be speaking?
No, it's going to be Sandy. She's just killing them. You just
love it.
If you see it, well, you saw that in San Diego. She is basically taken a really simple approach to investing and trading, and she's found the winners with Chaikin. So Travis and Chris said, "Hey, let's give Sandy a shot here, Mark. You're overexposed."
Well, I got to tell you, Melina was one of her best ones. I remember her talking about this one when it was like, somewhere in the mid-50s, probably earlier, but that's when I remember her mentioning it. So it's great, Mark.
Put up another one to end this, BABY. We've talked about this on the previous appearance. Yep.
Yeah.
Baby. I mean, look at that. Out of the blue, yeah. I mean, she just kept buying the dips and selling it. She's actually been trading the stock. She likes to find 2 or 3 stocks to hold, like she did last year with Skyworks and Southwest Air. And now she's starting to trade this one because she knows it's small cap and, these things move around a lot. But here's a stock that I think you should be buying on dips. Really interesting company. Natal monitor is a very important area. Keeping babies alive and identifying potential health defects, and this company does a great job of it.
What was that other one you mentioned, like AMSG, AmSurge?
Oh, yeah, AMSG. This is just a stock you got to own.
I'm just adding
it used to be called American Surgical. Yep.
Right, adding it to my little shopping list over here. So, well, now don't forget, folks, it's going to be October 9th and 10th that Mark and I, along with Pete, John, a lot of the other guys from Option Months, will be down in San Antonio for our Invest Like a Monster conference. Well, it's a great talking to everyone. And then tomorrow we're going to have Pete Najarian on with us. So, earnings cycle is really winding down, but we do have Cisco Systems reporting after the bell tomorrow, which is a bigger one. Some people are asking me about my Vega trade in these June puts and the SPY. So if you email me, even if you're not Inside Options Pro or anything like that, anyone who wants, email me at david.russell@optionmonster.com, and I'll send you the link to that. And we will be posting this summary sheet. But if you want, go ahead and email me, david.russell@optionmonster.com if you want, and I'll send you the trade we did in SPY puts. Mark, thanks so much. Have a great day.
David, it's been great. See you in September.
Indeed. Take care, folks.